Hi, it's Clint Waters here from AXTON Finance, and today I'm here with Heath Bedford from Performance Property. Heath, thanks for your time.
Thanks, Clint. Thanks for having you.
Yeah, no dramas. Look, I thought I'd take this opportunity to ask about what it is that you guys do as professional buyers advocates. We've done quite a lot of work together over the last couple of years, and you've achieved some really good outcomes for our clients. So tell us about Performance Property.
Yeah, sure. Performance Property is a national independent advisory firm. We're a team of qualified property investment advisors. We sit on the board of PIPA, which is the Property Investment Professionals of Australia, promoting ethics within the property investment industry. We're a team of qualified property valuers. We're licensed estate agents, not that we sell, we need to be licensed in order to buy on our client's behalf. Yep. And we're obviously property investors ourselves. Our core business is research, and then from that is acquiring, managing and diversifying low risk property portfolios for our clients.
Yeah, absolutely. I mean, without going into specific case studies, you guys have bought for a whole host of our clients, be it from first home buyers to investors building and diversifying their portfolio, to expat clients as well. So Australians that are based overseas that are time poor and have wanted to buy properties in Australia. It's been a really good result for those clients. But if we were to sort of say, like, one of the things is the clients say, well, look, why would I use an advocate? I can just go online and I can find a property on Domain or realestate.com.au. Why would I appoint a professional advocate such as yourself, Heath?
Yeah, sure. Look, it's a question that we get asked quite a lot from prospective clients. There's probably three main reasons. It's broad reasons that we look at. Firstly, we can widen clients' options. So our extensive research, intimate market knowledge can place a client into suburbs, markets, cities, even different states that they may not have considered.
Yep.
We leverage off our extensive relationships with real estate agents. We can get the client at the front of the queue, so to speak, giving them off-market or pre-market opportunities, taking some of the competition out of the equation, and most importantly, in my eyes, is risk mitigation and cost saving. So quite often we find a lot of investors' strategy is around buying in a suburb that they already live in, or they know, or their family or friends have lived in, or even worse, they've been seduced by flashy marketing material and they're bought off the plan.
Yes.
Okay.
Yeah.
So we find that that's quite often, obviously, opening up different opportunities for them. Our research can get them into markets they wouldn't have considered otherwise. And more importantly, we're buying at or below market value, so we're never overpaying for an asset. We inspect hundreds of properties each year. We know the difference between an A grade asset in comparison to a B or C grade asset. We know which locations are going to perform more better than others, so we're stopping clients making mistakes from buying underperforming assets or locations.
Yeah, I mean, look, that's a really important point about stopping clients making a mistake, and we've seen it firsthand, where you guys have purchased a property for a client, and it's looked great. You guys go to the extra effort of getting pre-purchase inspection reports, and you generate a lot of information around the metrics rather than the gut feel of saying, well, this might represent fair market value.
Absolutely, it's got to come down to the fundamentals and a thorough due diligence process. So,
because buying the wrong property as an investment is insanely expensive, right?
Well, that's right. The costs, the entry and exit costs, the difference between an underperforming asset in comparison to a high performing asset could be over a 10, 15, 20 year period, hundreds of thousands of dollars.
Yeah, exactly. So, I mean, look, it's as much about, I guess, insurance and peace of mind that you're helping your clients validate their decision to maximise their likelihood of long-term returns, rather than just simply saying, look, I'm being speculative and I think it's a good idea, and I've been to a couple of auctions. It's not something that you want to get wrong, is it?
No, not at all. And all our decisions, our purchasing decisions, are based on thorough research. We've got research over the 5 major capital cities, the 3 minor capital cities, and the 25 most populated regional centres in the country as well. So we can make a call on any market at any point in time.
Absolutely. And I guess lastly as well, it's a great opportunity to ask yourself, Heath, as a professional in the market. I mean, we've gone through an incredible amount of growth in the last couple of years, and there's been a lot of regulatory changes from the banking and finance side of things, which we can certainly attest to. What's your sort of take on the market? I mean, obviously we're based here in Melbourne, but you guys have got access to the market in a broader sense interstate. What do you sort of see as, for the investor looking to buy in at around that $500,000-$600,000 mark of what opportunities are out there and what people should be looking for?
Yeah, look, that's a good question. The markets are at all different points of the cycle across the country. Melbourne and Sydney have certainly been our strongest performing capital cities. The best time.
And that's what's reported a lot. Of
that's
course.
right. Yeah, in 16 years of property, I've never seen so much noise in the media around property and the next hotspot and these areas up 10, 15% year on year, and et cetera, and the boom and bust and all this sort of stuff. Sydney and Melbourne certainly have been the standout performers over the last 4 to 5 years. The best time for buying in those markets was probably 4 years ago, back in around 2013. The yields are too low for investors in both of those markets. They're getting closer to the peak of the pricing cycle. And look, over an 11-year doubling cycle, we generally see between 5 and 7 years of growth and then a period of pricing stagnation.
Sydney was a prime example of that as well.
Exactly.
I mean, it was stagnant for many years.
8 years, 2003 to 2011. The market effectively only moved about 25%. So we saw a great opportunity many years ago in that market. Look, we're seeing good opportunities in other states, particularly that price point that you're referring, that low 7 or below 700,000. Adelaide and Brisbane are representing good value within certain pockets and certain asset types. We're only focusing on character houses within those markets and within very close proximity to the CBD. Yields are a little bit better. We're looking at it probably 1% higher from a gross yield perspective in comparison to an equivalent asset in Melbourne or Sydney. So the serviceability is a little bit easier for the client.
Yeah, absolutely. As to as the price point, I mean, you guys in the last couple of weeks have bought 2 properties for clients of ours in Adelaide.
That's right.
It's quite amazing as far as when you look at the variables in your reports and the demographic of those particular markets, and as well as the yields as well. I mean, it's a great long-term opportunity, and you don't have to stretch yourself as much to enter those markets.
That's right. And look, Melbourne, Sydney, Brisbane, Adelaide and Perth since the 1970s have performed in line with each other, broadly compounding between 8 and 9%. That's house price growth. And a lot of people ask the question, Adelaide really? But it's just at a lower price point. It's an improving market.
Yes.
We're seeing it firsthand on the ground.
Yeah, that's great. Well, look, thanks very much for your time today, Heath. I really appreciate it. And of course, if you'd like to get in touch with Heath from Performance Property, please feel free to email myself, or there'll be contact details hopefully on the bottom of this email, and or Google Performance Property or AXTON Finance, and I'm sure you'll be able to get in touch with myself or Heath. Thanks again, Heath.